Well, guess what? It's right after the 4th of July, and we got some fireworks going on today. But to the downside, a big down day in the market, and everybody's wondering now, is this the big pullback in the market? Is this the market crash? Well, I'm going to show you and walk you through, navigate you through what's going on and how to best take advantage of it. If you're interested in that, you sit right there. Hey everybody, Glenn Tompkins, Senior Instructor here at VectorVest. Always glad to bring these videos to your video screen. So before we get started, if you're brand new to the channel, make sure you hit the like button, number 1, subscribe to the channel, number 2, if you haven't already, and number 3, hit that bell icon so that you'll be alerted when new content like this comes out and when it comes out. So let's get into it. What's going on today? Big down day in the market. The Dow is down over 400 points. Man, what do? Well, the first thing I want to tell you is don't panic sell. Use the stops that you have in place to lock in profits or mitigate loss. So let's talk about what's going on today, all right? So today, a big down day in the market, whether you're looking at the S&P 500 or the NASDAQ or the Dow. I am going to look at an indicator called the VVC or VectorVest composite, only found in the VectorVest software. We track over 8,800 stocks, so we give you a bigger, better, broad view of the market. But I want you to keep in mind, one day does not make a trend. Manage your stocks, use your stops. Everybody should already have planned their trades, so now trade your plan. Do not panic sell. Let the market come to you. What does that mean? Don't try to outguess what the market is doing. Let the market come to you. Let the market show you its hand and you play accordingly. So what are we in right now? We're in a situation where the market is exhibiting a rising wedge. What is a rising wedge? Rising wedge is a bearish pattern that begins wide at the bottom and contracts as prices move higher and the trading range narrows. So it's like this. It goes up and it's a wedge. It's a wedge. It's a consolidation pattern, but a rising wedge is a bearish pattern. In contrast to a symmetrical triangles, which have no definitive slope and no bullish or bearish bias, rising wedges definitely slope up and have a bearish bias. So I'm going to show you that rising wedge in a moment. So what's happening in the market right now? Folks, there's 3 things that move markets globally. I don't care who you talk to or what you do. There's only 3 things that move markets globally. Now, there's some ancillary things that also move markets, but 3 main things that move markets globally. Earnings, and as long as a company or companies are making money, it's going to be bullish for the market. There's no ifs, ands, or buts about it. If a company or companies are making money, that's a bullish sign for the market. And guess what? We're in July. We're about to enter into quarter 2 earnings season. Something to keep on track of, go to a company or go to a website called FactSet, F-A-C-T, set. SET.com. And that will keep you abreast of all of the companies who are reporting earnings, and you'll get a percentage of how many companies that have reported have beat or exceed earnings and have surpassed or fell short of revenue. Interest, second thing, still historically low, but for how long? That's key. See, interest rates being as low as they are help to buoy the economy and help to stimulate the economy. But we all know that the economy is running hot, inflation is running higher. How long can the Fed keep interest rates low? They say that they're going to keep it low until 2022. Originally, they said 2023. So we'll see what happens with that, but still historically low. And the third thing is inflation, as I just talked about. Inflation is high. People don't want to hear me talk about inflation because they think that I'm scaring them. I'm not scaring you in any way, shape, form, or fashion. I'm giving you the information that you need to know to make a better decision in what's going on in the market. Inflation is still high. The Fed keeps saying that it's transitory. Well, why is it transitory? Let's go to the next step. So those are the three things that move markets globally. What else is going on? Job situations. A lot of states now are cutting back on the extenuating circumstances that gave people a lot more money on unemployment. So that's coming back down, and people are going to have to go out and start to find jobs. And there is no shortage of jobs everywhere you look. Now, the whole transitory thing with inflation is the Fed is saying as long as the job situation is the way that it is, inflation is still transitory. They need jobs to catch up. So we'll see how that plays out. And last but not least, what's going on is the pandemic status or situation. We're now talking about variant D, which is another strain of the coronavirus. People are afraid of it. So that could pause and show bad ill will on the market as well. So we'll see. So that's what's happening. Now let's take this a step further in regards to navigating through all of this. What do you do now? 1, pay attention to market direction. It's always tough to trade against the trend in the market. If this ascending triangle does happen to turn around and be a reversal in the market and start going down, it's going to be tough to buy stocks long going against the trend. But we're going to talk about that in a minute. Keep your eyes on volatility as the market starts to fall. If it does, all right, we're still in a narrowing channel. We're still in a consolidation mode, but keep your eye on volatility. That's when you see big spikes in price of stocks. Use stops to manage the trades. That is so key here, folks. You should not be blindly investing in stocks. You should know when you're going to get out. Become cautious about entering into new trades. All right, make sure you're only buying on up days. You don't want to start off the trade on a bad side, buying stocks on a down day, and consider hot industries. Later this week, I'm going to release another video for you, something to keep your eyes on, and that's why you want to hit the bell icon on some industries to take a look at right now. All right, with all of that, let's get into my stocks here. Here's the two. I'm looking at the spiders for those who are not VectorVest subscribers. Here's the S&P 500 shown here on the left. And on the right, we're looking at our market timing graph, which is the VectorVest composite, the VVC, which is an indexed arithmetic average of over 8,800 stocks. And again, we feel that this is a better representation of the broad market move. Notice that right now, as we look at what's going on, here's that wedge pattern, rising wedge. It is a consolidation pattern where it's got to break one way or the other. Which way? Well, normally on an ascending wedge, it normally means that it's a bearish formation. But as I look at the VectorVest composite, I see a couple of things going on here. Yes, we've got a big down day today, but we've got a little wick forming at the bottom as I record this video right now. That says that I've got a little bit of buying pressure coming in. Not a lot, but a little bit. Number 2, I've got a level of support on the VectorVest composite sitting at the value of $65.14. I've got a level on the S&P 500 sitting at the value of $411.13. So I've got some room to the downside before I really have to get nervous. Number 3, so noticing here that I've got a level of support or the rising wedge support level. Notice that every time the market is pulled back, it's pulled back to this line. Same thing on the S&P 500 for the most part. This is the line that if this is going to be more of a bearish feel or some kind of a market crash, we've got to break below that level of support. Now, if this is a sentiment of a possible reversal, then these are the things that you keep in mind. Am I telling you that this is a market crash right now? No. I'm telling you that today, the market is down bigly today. It is what it is. But manage your trades. Do not panic sell and do not just go off half-cocked. Look at whether it's the S&P 500 or if you're a VectorVest subscriber, looking at the VVC to give you heads up as to what's going on. And you know that in VectorVest, we have market timing signals. The fastest signal we have is the primary wave. Let's see if it closes down today. That will be your first flag. Then we look at the DEW. Then we look at the confirmed call. We've got a lot of steps to go through before we say that the market is definitely in crash mode. Today is a down day. Today is not a crash day. But as you keep in mind, I'm going to continue putting out videos to keep you abreast of what's going on in the market by way of market timing. And yes, as you see, we can time the market. We don't predict which way the market is going. We follow the trend of the market, and we keep our subscribers on the right side of the trend. So, folks, until the next time, all you have to do is keep your head off the swivel. Stay focused on what you're doing. Let your stops manage the trades. And if you do that, you're going to be okay. If the market does continue to fall and breaks out of that wedge, you'll already be prepared, because as the market continues to fall, you don't replace stocks. Remember, you only buy on up days. If the market continues to fall while you're out of stocks, then you don't buy on down days, only on up days. That's what I mean by let the market come to you. So, folks, this video is over. Until the next time, see ya. But I will be upgrading, or I will be having more videos on this throughout the week. So until the next time, folks, see ya.